Hey everyone, me Kevin here. I want to apologize for a few things. Number one, the turbulence that it seems like in my YouTube titles, and so I'm going to try to be a little bit more clear with the YouTube titles, but also we got to talk about what the Federal Reserve just said and what it could mean going forward. I do also have to apologize for one more thing. I did spend a lot of money on this 3D printed Rust MP5, and I think you should too. Hashtag not sponsored. But it's okay because we just doubled our money on call options this morning. Look at this, baby. TMF call option, $1.31. Entry price, boom, 260 exit. Let's go. It's like a 99% move. That was a call option this morning. Remember, we got a coupon code expiring today. What a day. I have a double on a coupon code expiration day. Okay, listen, let's talk Fed, okay? So here's what I think, especially after this jobs report this morning. The jobs report this morning, you know it's going to get revised down. I'm not going to sit here and read you all the numbers out of it. The last one got revised down. This one got, came in lower than expected. We had people removed from the labor force, which actually weirdly lowered the unemployment rate, but the numbers aren't good. We're adding over 500,000 part-time workers. We're losing about over 400,000 full-time workers. Workers might be, in a place where we are seeing that nervousness expanding, and you're finally getting Fed officials like Waller, who just came out and spoke and said, look, it might be appropriate to front load cuts. That's a 50 signal, by the way. Now, Waller doesn't see a recession, but by him arguing, hey, it's time to front load cuts, it's a sign that people like Waller and Daly, they're starting to get a little bit nervous that they've overdone it and they've gone too far. I think with Waller's comments this morning, Daly yesterday, I think we're almost certainly going to get a 50 basis point cut here on September 18th. I want to show you why. Take a look at this analysis I wrote right here. If the Fed cuts 50 at each meeting between now and May, we might be too low. I mean, I personally think we're probably going to go back to 2% by the end of next year, but I think 2.25 by May is too optimistic. Probably means you're going into recession, which is actually not optimistic. If we cut by 25, I think you're going to be too slow. So I actually think the course we're going to see here is a 50-50-50, then 25-25-25, and these 25s will depend on the signals that we get from the data. But think about it this way. You can't start with 25 and then go 50. But you could start with 50 and then reduce to 25s as you start getting closer to that neutral rate. But the signal is clear now, though. Rates are too tight. So you got to get a 50 slash. When you get that 50 slash, you're going to have markets that still have to price in actually getting a 50. I'll tell you what markets are pricing in right now. They're pricing in a 64% chance of a 50 basis point cut. That I think is going to move up to 100%, which I think is going to take the yield curve not only to the point where we have even more of a steep yield curve. I mean, look at the 10-year today is down 6.4. The 2-year's down 10.8 basis points. This is a steepening yield curve. We are now positive on the yield curve by about 4 basis points. The more rapidly this becomes positive, the closer we might be to a recession. And this is where I also honestly want to apologize. Well, I'll tell you what I want to apologize in a moment, but I want to show you why why I was able to double this option this morning. I told course members this morning, I go, this is weird. We had a bad labor report and a bad revision. Why the hell are yields going up? This is abnormal. So right about here, I entered a trade betting that yields would continue to fall because I thought this was bond profit taking. And I think that's exactly what it was. My bet was that yields could go back down to -6 basis points. They went to like -7 there for a minute. It was crazy. And I thought at bare minimum, we would be slightly below where we were before the jobs report. That's why I decided to go for a call option on a ticker called TMF, which is a triple leveraged bet on bonds, basically, the 20-year. So that worked out great. That worked out well. Wonderful. But I actually think that this trajectory is going to continue substantially. And this is something that I've been talking about with course members for a while. And I just basically yeeted my Robinhood portfolio, which I don't have a lot in my Robinhood portfolio. relative to my other portfolios. But I basically just yeeted my Robinhood portfolio into TLT. And you can see it's done remarkably well here over the last 3 months. I mean, we went from, what is this? It was an $80,000 portfolio to like 192. It did go down there for a moment as yields spiked to like 151, but now it's like 235 or whatever. That's the only thing that's sitting in there is TLT. Like, I'm so confident that rates are coming down. Obviously, I could be wrong, but I'm dumping my money into this because I think the bet is pretty obvious that the Fed's behind the curve, or they're going to wake up to realizing this. And that's what we're getting with Waller commentary today. I also think we're getting 50. I think we're getting 50 because, think about it, on the way up, you went 75, 75, 75, 50, 50, 50, 25, 25, 25. As they get closer, they calibrate more narrowly. Okay, so now on the way down, maybe you even go 75. Go down. I mean, they're not going to. That's highly unlikely because the market's not expecting that, but you could. So I think you go 50, and then you go, what's the data? Oh, let's go 50 again. If the data starts coming in hot, go 25 or skip a meeting. You could always do that. You could go 50, skip a meeting, and it's kind of like doing 225s. So, but you can't go 25 and then go 50 because you're signaling that you're screwing up. Now you're accelerating the pace of cuts. Weird. So they're going to go 50. That's my bet. But I do want to talk about what I wanted to apologize for. So we wrote this out in the course member live stream, and I thought it was really cool. In addition to our analysis that we did on Broadcom's backlog, I wanted to show you this. Look at this. When Kevin has been bearish, I know people are like, oh, Kevin, you're always bearish. But I'm actually not always bearish. On November 26, 2021, I dyed my hair red, and the market crashed for the next 7 to 8 months. I got bearish here. I actually shorted ARK with SARK with a $3 million short, but I actually paper-handed that way too early. In January of 2022, you all know I went very bearish in January. I got the SH9T on the terminal, which the 9th letter of the alphabet is I, which is crazy. But I went bullish too early. So generally, I'm a bull. I did go bearish March and April. You could go back and watch my videos of this year, and we did have a little bit of a market pullback. And I've been bearish since July. So I know people look at me, they're like, Kevin, you're just always a doom and gloomer bear. But then when you look over here, you're like, pre-pandemic, I bought every single dip. During the pandemic V-shaped recovery, I bought every Larry Kudlow dip I could. I literally refinanced all of my homes in March. And in late March, my refinance is closed. I plowed it all into the stock market. And I mean, that was a pretty lucky timing bet because those investments made bank. In February of 2021, the market started falling. I got prey on the Bloomberg terminal, but I incorrectly stayed bullish. In October, I dyed my hair green, and we had after I lost the election in California, we had a massive rally in November of 2021. And in late 22, when I launched my ETF, I thought we were closer to the bottom. We called for the volatile Nike swoosh, which we maintained in 2023, and I even went green hair in November of 2023. So I'm a bull much more than I'm a bear, but I just have to be honest. Right now, I'm very, very bearish. I think we are literally, the quote of the day is one market correction away from a recession. And I want you to look at this, by the way. The option that I played on TMF, I'm going to, just a free lesson here, okay? I went for the $60 option on this. That's because we bottomed here at 60.64, and I wasn't paying a lot for extrinsic value. I don't like to pay a lot for X. I want to pay a lot for intrinsic value. And so I went in the money. So basically every little bit that this went up, I just printed money. Now, had I sold at a double. Some people who also went in on this trade, who got the alert and are like, Kevin, because remember, these aren't designed to be copied. People look and go, Kevin, I agree with you. I think that's a good trajectory. Some people are still in this trade, and they're up close to a 3x now, which is crazy. Because I think 100% intrinsic value on this would be $3.43 right now. I got it at 131. It's a 2.6x if someone was still holding right now. Crazy. Obviously, the market's selling down, but again, a few things I just want to apologize for here. One, I know I've been coming across as a dirty bear, and there have been so many bearish videos. I don't know. I'm not always a bear. I think you know that. I think the Fed talking about front-loading cuts is a clear as day 50 signal. I think Mary Daly was pretty negative yesterday as well. I think it makes logical sense to get a 50 from the Fed. And write down the calendar for the Fed meetings. They're right here. Sept 18th, which is a summary of economic projections meeting. So we'll get projections as well. I think that's going to tank yields, man. Because this is where they could go 50. Like, let's write this down. Prediction is they go 50. Signal rates at probably 4% year end, which is 125 BP of cuts. And signal end 2025 at probably 3%. Something like that. That's my prediction. This, by the way, is roughly in line with what the market thinks. I don't think the SEP will move much, though, but I think the 50 will help. And then you'll get more SEPs over, at every other meeting, basically. DocuSign's just a warning. DocuSign is an example of what happens when mega growth turns into nominal growth. DocuSign now trades at 2.6 peg forward year end with just 6.45% average expected growth over the next 4 years. DocuSign was growing like crazy during the pandemic. The stock ran up to $314. Now it's down 81% from its peak. It's cash flow positive, and it has a peg of only 2.6, which is totally reasonable for a software company. Why is it down 81% from the peak? Because the growth crashed. The stock market rewards growth. Fed Williams ready to start the process. Unemployment rate still low despite the rise. This makes me nervous because statistically they could say that unemployment hits a low of, has been historically low around 5.5%. That makes me nervous because I think that's going to make them cut too slowly, which I don't like. But anyway, so I'm going to try to be a little bit more clear with my titles. I don't think I'm a perma bear. I think you know that. I'm just going to keep trying to do my best and put one foot in front of the other. There's a coupon code expiring today. We've got, I think, 2 seats left in the Mastermind, metkevin.com/mastermind. That takes place at the beginning of next month. Coupon code over at meetkevin.com expiring today. Email us at staff@meetkevin.com if you have questions. And if you want actual financial advice from myself and my team, you'd get the advice through my team from me. That's because we, radio communicate and work together, or I'm just walk into the office and we talk and communicate about people's scenarios. We're offering financial consulting and financial advice, which is very important, especially during tumultuous times in the market, for real estate, stocks. You could be all in VOO. How are we gonna position you for the future? All in S&P 500? What percentage is right for you for real estate? What percentage is right to be in a retirement account? That's what we're doing. Learn about that over at stockhack.com. We're just collecting an interest list now, and we expect to actually start that process October 1. Anyway, thank you so much for being here. I love y'all. Really wish you the best. Grab that coupon code. Thanks so much, folks. See you soon. Bye.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.